Trenches Trading. I'm your host. It is November 9th. It's Sunday, 1:27 p.m. Eastern Standard Time. We're going to go over the picks for this week. All right. But first, let's start off with the news. Let's see what's coming out this week. So, Monday, nothing. Tuesday, nothing. So, you got a bank holiday on Tuesday. Oh, it's Veterans Day, right? So the bank's probably going to be closed. What's the say? Yeah, U.S. banks will be closed. Veterans Day. Awesome. Shout out to all the vets. Thank you for your service, guys. All right. Wednesday, we got a few FOMC members speaking. Seems like Waller has the most interesting news at 10:20. All right, that's Wednesday. Thursday. Here's where things get juicy. So these are all tentative due to the government shutdown, I'm sure. By the way, this has been the longest government shutdown in history. Um, the longest one before was 35 days. This one is currently going to 7, 14, 21, 28, 31, 32, 33, 34, 35, 36, 37, 38, 39. Today makes 40. So 40 days government shutdown. We are making history, folks. Something interesting I heard that the government shutdown was to allow federal companies to change their payment systems from the old legacy systems to the new Swift systems, which will incorporate the ISO 220 coins. Basically, things are going to be running on like the XRP ledger or Cardano's blockchain. What was the other one? Algorand. Uh, there's some other ones. But essentially, that's what is holding our government up. And they just, they don't want people to start buying up crypto crazy. So they're not going to let us know that. Anyways, that is just a rumor. I guess we'll find out if when the government shutdown ends, crypto prices go through the moon. Core CPI, CPI, MM is month over month, YY is year over year. So let's see. What was I going to show you guys? Here we go. So changes in the price of goods and services, excluding food and energy. That's the core CPI, excluding food and energy. And the regular CPI is everything together. All right? So everything including food and energy. So these are going to be interesting numbers. This is Thursday, tentative Thursday. All right, so Thursday should be some nice volatility if this happens. And then we got core PPI, retail sales, PPI, retail sales. All right, so the core PPI is also excluding food and energy. All right, so it's the change in the price of finished goods and services sold by producers, excluding food and energy. Core retail sales excludes automobiles, okay? Total value of sales at the retail level excluding automobiles. So can you imagine what PPI is? It's everything, right? Including food and energy, and retail sales would be including the automobiles, right? That's what it said, yeah. All right, so that's going to be Friday. So we got Thursday and Friday, end of the week, heavy news. So I would imagine some end of the week volatility. All right, let's jump into it. So for this week, we got a whole lot of interesting stuff here. What do I want to do? I want to make this as smooth as possible for y'all. Give me 1 second. Mm, beautiful. Um, this is okay. Great. Okay, so that I don't confuse you all. Lemonade. Alrighty. So as you can see, I got a long list of names this week. And what I don't want to do is basically set up every single security and then get to the options and there's a crap spread. So what I'm going to do first is actually look at the spreads and then decide based on that which name I'm going to keep. So let's start with A. So they only have monthly options, and this is way too big. All right, so see, these spreads suck. These December spreads are not horrible, right? 40-cent spread, but 70-cent spread is crazy. It's not like this is $1,000 stock. So A is a no-go. All right, so getting rid of A. A firm. I love A firm. I love the setup. I love the company. I'm pretty sure they have nice options. Yeah, look at this. Tight spread. All right. All right. AMGN. AMGN. Same thing. They got weeklies. This is a $300 stock. So I could be a little bit more flexible with these 50-cent spreads, 60-cent spreads, 50-cent spreads. And it's not horrible. I'll keep them. I know Amazon has really liquid options, but I'll just show you guys just in case you want to see. Actually, you know what? I'm taking AMGN out. No need to play something like that when we have Amazon with tight liquidity. Let's see, AVGO. Look at this. Also, pretty tight spreads, right? 40 cents, 50 cents. Okay. Ew. Never heard of this one. Ew. So this is not bad. 30-cent spread. Um, mm, it's only an $80 stock. Don't like that. Alright. Sorry you guys to go. Ew. Did y'all be earning still? That's interesting. Anyways. FSLR. So 267 is about a dollar. A dollar is about dollar spreads. I'm not a huge fan. You got to go. So sometimes I might try and make an argument for why I would trade something, but the reality is there's so many other stocks with tight spreads. Like, look at this. $300 stock, 20-cent spread, 10-cent spread, 7-cent spread. So there's no point in forcing myself to trade something with a dollar wide spread or whatever, like this, $1.25. Like, these are ugly. Why the hell would I trade HWM? If I really like the setup, I'm better off just buying the stock in C. Oh, look at this. These spreads are horrible. See, so I've already cut like, I don't know, 5 names off the list. I'm glad that I did not decide to run these setups and do the technical analysis portion before cutting these. Look at this. ISRG, horrible, man. JP Morgan. Chase what matters. See, I can mess with this. Little 25-cent spread, 20, 30-cent spread. I could do that. Eli Lilly, $2 spread. This is a $900 stock, so that makes sense to me. Um, What do y'all got going on? Let's see, I traded this thing back over here in October. Um, this thing's up here at 3 ATR. $2 spreads. No need to force it. Lemonade. So $75 stock. This is a horrid spread. This one's 50 cents. Oh, these things are pretty bad. 50 cents. Like there's 90 cents. What's going on? They just beat earnings too. They did a good job. This was a nice little consolidation pattern. Price finally broke out. And this is nice. See, Lemonade has a ways to go. I'm just curious here. Wouldn't be surprised if this thing just ran right through here, just how it fell through. Would not be surprised to see this thing pump up here to $100 here pretty soon, especially with this weekly squeeze firing long. We got a lot of volume coming in. It's a nice chart, but I don't like their spreads. These down here are a little bit better, but again, not gonna force this. No need to. LRCX. 30 cents. About 30 cents. So those are better. I like that. MP. Yeah, these are good. 25 cents, 20 cents, 30 cents. MS. I don't like that. That's cool. That's cool. That's cool. Yeah, that's not bad. RTX. $1 spread is crazy. 30 cents, 26 cents, 12 cents. Alright, those aren't too bad. SEDG. Solar Edge. This is a $40 stock. I'm not trading that. Not because it's a $40 stock, because I didn't like the spreads. All right, $40 stock. Look, this is like a 70-cent spread. It's insane. Uber's pretty liquid, yeah. And the last one, W. These are good, 15 cents. 25 cents. 50 cents. These are decent. What do I want to do? Nah, I'm taking it off. Alright, y'all. So, I don't remember how many were on the list to start, but now there's like 10. Let me just clean out these charts. Most of these names pop up on my scanner over and over again, so either I've set them up or I've traded them, recently. It makes sense to me. These things tend to, once they meet the qualifications that I have for a setup, they tend to continue to do their thing. Alrighty. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, 10. Perfect. So we got 10 nice names here. These are all nice names. They look beautiful. All right. Let's set these things up. Let's go over them. And yeah. So let's start with A-Firm, AFRM. Let's look at this monthly. Before I get to this, actually, let's just look at the indexes real quick. So the SPY came up, hit its second target, the 1618 Fibonacci retracement, and then bounced down. All right. So we hit not just the 1618, but we also hit the 3 ATR. Okay. Let's see on the weekly chart, what does this look like? So we've, come up close, came down. We actually nicked it over here the last week of October, and then last week we started pulling back essentially. Um, what would be healthy in my eyes? Either we respect this 663, this point of control level, or we continue to pull back to about the 21 exponential moving average here around 650 or so. That is what I would consider healthy. So either we form a consolidation pattern here on top of the point of control, and then we take off to 700 to end the year, or we continue to pull back down to the 650, maybe even to the 630, and can consolidate a little bit before pushing back up towards 700. That's the SPY. Let's look at the Qs. Same thing, right? So the Qs popped up through this 3 ATR level, and then price started pulling back. Got bought up here on this volume shelf about 600. Right, came down to 598. Got bought up, closed the week around 609. So, either forming consolidation pattern around this 600 level of support or pulling down towards 580. That's what I would consider healthy. The Dow, same difference, except a lower fib. This is the 1272 Fibonacci retracement extension level. Price hit it, started retracing a little bit, and essentially got bought up off this volume shelf here around 462. The low was actually at 464. So there you go. If price wants to consolidate here before turning up and aiming for this next target, this 504 level, that makes total sense. If price came down to this 455 level and consolidated, that also makes sense. Especially after this, 31% run up in 200 days. So this thing's been pumping. Makes total sense to me. Last but not least, the IWM. Seems like I did not have a fib retracement on this. Oops. Let me see what the fibs are showing. Okay, so price, all it did was come and make a new all-time high. The price that didn't actually get up to the 1272 level or 3 ATR. IWM, struggling compared to the other indexes, but it did make a new all-time high and pulled back, not quite to the 21 EMA, but pretty darn close. About this 235 area as support. The interesting thing is that there's not too much volume here. It's pretty thin, so if price continued to fall down to this 327, 324 to 325 area, or 225, 227, excuse me, that would make total sense to me. So IWM could either keep falling down to this 225, consolidate before turning around, or it could just consolidate over here at 240, which was previous resistance back in December of 2024. All right. So let me just put a line here. All right. So that was previous resistance, and now it seems like price is fighting to make that into support. So that's the case for IWM. That's all 4 indexes. Let's go through these charts. So this is AFRM, AFRM. Back in 2020, 2021, this thing made its debut and ran amok for 1, 2, 3 months, right? Essentially running up from $60 up to $160. It was a great time to trade AFRM. I remember actively trading this stock and making lots of money. and then it basically pulled back in 2022 with the market dip, consolidated for over a year, about 2 years here, and then now it's been making its way out of this consolidation area. What does this company do? This company allows people the opportunity to make purchases for cheaper. Not for cheaper, but it makes purchasing products more affordable. So they basically give people payment plans, which allows them to buy expensive products more easily. It makes it more accessible. Um, so, for example, if you want to buy a juicer that costs $1,000, before these companies started popping out, you would have to have the $1,000 to buy the juicer, or you would have to go to the bank, get a loan, and deal with the bank's interest rates. And as we all know, banks love to make you pay for using their services. Um, A Firm and other companies like A Firm, I believe Upstart, Klarna, there's some other ones. Essentially, they do what the banks do, but 10 times better. So they'll allow you to get that $1,000 to purchase your juicer, and instead of you paying back, $1,200 or $1,300 because of the interest is minuscule. Sometimes you don't even have to pay it back with interest. They just allow you to pay it back in 12 payments or 10 payments or 6 payments. So you're paying $200 a month instead of that full 2,000 or that full $1,000. So that's what A-Firm does. I think this is a great company going forward as inflation makes things harder, and as we see this unemployment rate tick up, people having companies having more layoffs and basically getting rid of workers. So things are getting more expensive and more difficult to purchase. So I think companies like A Firm are going to do really well in the next decade or so. Um, it's down here around 60, $70. I think it's a great price. Just getting back to all-time highs would be over a double, right? It'd be like about 145% gain. So really good stuff. If you bought the stock through this consolidation period, you're already up 600%. By the time it gets to all-time highs, you'll be up over 1,000, over 1,500, 1,700%. So amazing stuff. I could absolutely see this thing running to 500 in the next decade or so. Anyways, A Firm, AFRM, has a beautiful weekly squeeze. So this thing's been squeezing for 4 weeks now. They just reported earnings and they killed earnings. They beat their earnings by 105%. So that's, showing you what's going on with them. I'm actually curious. I won't be able to do that. Let me use my phone. I want to see what their metrics look like. I won't pull it up on my laptop since I'm recording, because then my login information will pop up on the screen. And I don't edit these videos, I just make them and then post them. So I won't be able to take that out. But I can pull it up on my phone and I'll just... Oh, so this is pretty sweet. So their sales are up 37% this year. So from last year to this year, for every $100 they made last year, they're making $137 this year. Their earnings per share is up 109% from last year. And their operating margin is up 23%. Their gross margin 85%, and their profit margin 6.7%. So not only are they making a little bit of money, but they're making more money than they were a year ago. So pretty good numbers. I like it. Um, and they've got some news. Look, A Firm Holdings reports 933 million in revenue, faces cardholder challenges. This is A-Firm struggles to attract new cardholders for its A-Firm card due to limited resources. So this is definitely true. I like the company. I don't like the A-Firm card and the way that they offer it. I've read the offering. Doesn't make sense to me. So it makes sense that they're having issues with that. Because if it made sense, I would have got myself an A-Firm card. What I thought the A-Firm card would be like a card with like credit, I guess, essentially. You could swipe for your product, and then after you get your product, you get to go online and select which payment plan you want to use. But the card is not like that. Instead, the card is linked to your account, and whatever purchase you make, you have to have, don't quote me, but if my memory is correct, you have to have that amount of money in your account to be able to make the purchase, and then you can choose from a payment plan. So it kind of negates the purpose of the company, like allowing you to choose a loan if you have to have that money there as collateral. So I'm pretty sure that's what it was. And I was just like, this is stupid. For that, I can just make the purchase the way that the company allows you to make the purchase, choose the payment plan, and I don't have to worry about having the funds in my account. I just need enough to make the payments. So that's why I didn't choose the A-Firm card. It makes sense that it's a resource thing because they obviously will need the collateral to uh, keep working with other businesses that take their services, right? So, anyways, A-Firm. These guys got a support level. I gotta change my fibs. So that's 0.50 level. All right. This thing needs to go. Okay, so what was the low? The actual low was 65.71. All right. And this point 0.5 or 50% retracement level from the high is at 65.45. And then the price was bought up. So that means this level was respected. Okay. All right. I also want to run the fib extension. Nice. So we got two hits. This one is the 1618 level. And this one's coming in at 65.68. Again, the low is made at 65.71. So we got a confluence of these two Fibonacci levels. And along with that confluence, we have the level, the price respected the level. Okay. Last but not least, I want to see if I can get a fib extension level. Let me see here. Um, so essentially, just want to move the area, the fib area around and see if I can find some sort of confluence on an area that has not been violated. So I guess this would be the closest one. And this is 6510, I believe, or 6610, but it was violated, you see. So by violated, I mean that the candle dipped underneath the level. You see this green line here? The price was violated. So let me see if I can lay you down. There you go. Okay, so these two levels, they work. Okay. So A firm came down, bounced off this level, and on the 30-minute chart, price made a higher high, a higher low, right? Another higher high, and moving averages are crossing up. So this is looking like the bottom, essentially. Okay. So what does that mean? For me, as a trader, that means this is where I define my risk. It's 65.45. So 65.45 to 65.68. We have a fib cluster. All right, my stop loss. I'm comfortable like 65.25 or 65 if you like the round number. Plus 65 is also a psychological number, right? Because it's a round number, right? 60, 65, 70, like that. Okay. So this is why I define my risk. So that means if I enter a position, this is my stop. Okay. Ideally, you want to enter as close as you can to where you define your risk. And then I want to see what the fib targets could possibly be. All right. So these are some possible targets. We got this 86 to 89 as resistance, first major resistance level. We got this 100% retracement level, which was $100. It made a high at 100 and then failed. So that would be a retest of the old highs. And then if price gets through there, immediately past that area, you have the 3 ATR here at 102.05. And then you have the first Fibonacci extension level, 109.33. The second one, which has a confluence with the 5 ATR, 121.19 to 76. That's my Naruto alarm clock. It's almost time for me to get up out of here, so let me speed this up. All right, so that's A firm. This is where I define my risk. Let's look at what this would actually look at in a real life scenario. So that would be my stop area. And somewhere in between these two levels, this pink and blue, would be my first target. So I'd be going for risking $1 to make $1.80. Going back to the highs, risking $1 to make $3.25. The next fib level is $4. The next fib level is about $6. And the last fib level is about $7.50. So great risk to reward ratio, generally speaking. Since this is a weekly chart, we want to go far out the money, okay? So minimum, I'll be looking at these December contracts, 40 days, and then January, 68 days, and February, 103 days. Okay, so for A firm, obviously the closer, the least amount of time you have is more, oh, this is not A firm, this is W. Almost got me. So the closer the contract is to expiring, the more risky it is. So I would classify this as aggressive. These are moderate. These are conservative, okay? 75 calls are fine. They're essentially right just a little bit out of the money. If you want to go in the money, you can get the 72.50s, okay? So for A firm, you could do the 12, 19, 75 calls. These are aggressive, moderate, conservative. Or these, I think, January 16, 75 calls. And this was February 20th, 72.5 calls. So these were $12, $8, $6.30. So I'm going to say at $12 or less. These were at $8, I believe. And these were at 6.30. Let's see, beautiful. Now, if I wanted to do something more affordable / aggressive, I would go for either these 80s at 430, 420, or these 85s. You could go to the 100s if you wanted to do something moderately aggressive. So like these January 100 calls at 170, or again, the December 80 calls at 430. All right, so those are your options, or those are the options that I like. AFRM. All right, I'm gonna move a little bit quicker because my time is limited. So this is Amazon. Amazon, it's in a monthly squeeze and a weekly squeeze that looks like it wants to fire long. They beat earnings, and a daily squeeze which has fired long already. So they came up through the ATR, 3 ATR, and then started retracing down. Looks like they're got bought up right here at 382 level, so it's interesting. And let's see if there's anything on a smaller time frame. So there's no squeezes on these smaller time frames, and the price is extended up here, kind of just hanging out in midair. So I would either wait for a setup to appear here around the 30-minute chart, or I would wait. Yeah, that's what I would do. I'd just wait for some consolidation, and then I would look to capitalize off that consolidation. AVGO. So AVGO's been killing it. The weekly, we've traded this thing several times. I think down here somewhere, definitely in through here before this pump. So price again is right now back once again in the buy zone. They had some news. What is this? So that's interesting, right? There's a you made too money tax. So anyways, price is in the buy zone again. It's currently sitting on top of the 34 EMA. And, you know, as you can see, going back to when the moving averages switched positively, when A firm comes down to 34, it tends to bounce up off of it, down to 34, bounce up, down to 34, bounce, 34, bounce, 34, bounce, 34, bounce. Now it's back in the 34. Trading is all about patterns. Recognize the pattern, take advantage of the pattern, define your risk using the pattern. So, price is in the buy zone. This is a daily chart. Let's see. I mean, honestly, I would go with about 30 days. It's not too bad. Let me see actually if there's a setup on a smaller time frame. No. Okay. So yeah, the daily, these 12th December 12th um, contracts. The premium here is expensive, so if your account is smaller, you could definitely work a spread. 34 EMAs at 349, and the 21 is at 355. So you could do a five wide. For spreads, I like to give myself a little less time so I could capture some of that premium. If if you want to be aggressive, definitely I would go just with these November 21st contracts, and I would just do a 350 by 355. All right, so you can get a five wide spread for 240. Uh, the risk is 240, obviously 243, and the upside potential is about the same. It's only going to be 257. So risking one to make one, that would be the aggressive one. The one that's a little less aggressive would be the November 28 ones. Same setup, 350 by 355 for 240. Essentially, price has to close over 355 or over the 21 EMA for you to make money. And it gives you, oh man, gives you 19 days for AVGO to get over 355. If it does, then this thing will be in the money and you'll make some profits. It could close over 355 and 1 cent, and as long as it's over that by November 21st, then you'll be good. So I'll just say 1121 vertical call spread 350 by 355 at 250 or less. Risking one to make one. All right, let's go to Google. So Google's fully extended on the monthly and on the weekly, and the daily starting to consolidate. I'm sure there's a setup in here somewhere. Here we go. So this is my setup. This is the setup I trade. All right. This bullish pattern. All right. Like a bull flag, like an F. It's probably might be called a bullish pennant or something like that. Either way, it's a bullish shape. I love to trade it. So Google is backing 3.2 billion for fluid stacks obligations to TeraWolf and 1.4 billion to Cipher Mining, gaining equity warrants and securing priority access to cloud capacity. So interesting. I would look into these companies, Fluid Stacks and TeraWolf and Cipher Mining. I don't really know anything about them or about what that article was talking about specifically, but Google's putting their money up. So they beat earnings 26%. They got more revenue than anybody thought by 2%. This is a 130-minute chart, about a 2-hour chart. The buy zone would be essentially this area here, right? 274 to 280. Ideally, you want to enter at 274, right? And this is what it looks like. So the point of control is up here around 283. Major resistance coming in around 286, 285, 286. 3 ATR right up here close to the all-time highs around 291, 296. First fib extension level and 301. 5 ATR, psychological number of 300, and the 1618 Fibonacci retracement extension level. So a lot of things. Uh, it's a 2 hour chart, so you don't need a lot of time. These November 28th are fine. If you want to be more aggressive, these are also fine. November 21, in my opinion, of course. Um, right at the money is always best, honestly. You get a nice delta of 53, and the premium just holds better in the contracts. This is a pretty interesting, what people would call a reversal pattern. I believe it's called the Morning Star, I believe. Basically, got a red candle, doji candle, then a green engulfing candle, or something like that. Don't quote me on it. I'm not an expert on candlestick patterns, but I know what it looks like. Anyways, so this is the buy zone. I'll stop out if Google starts closing underneath 274. Okay. So stop out if Google starts closing under 274 and take profits near resistance at 286. And then my next take profit would be around all-time highs, 291. And then the next one would be at that 296 to 301 area. I'll say to 301 plus. If you want to capture the move, the best thing would be to just get these December 19th calls, honestly. You can get these 280s if you want to be a little bit more conservative. If you want it to be moderate, you can go for the 290s. And if you want to be aggressive, then I would say the 300s. It's a little ways out the money, but Google's only $20 away from 300. Giving it 40 days to get to 300 is plenty of time, and the market makers have baked in a $27 move. 27 plus 280 is over 300. So the math is mathing. All right. From the current area, 27 would be about 306, 305. So those 300 calls make sense if you like to be a little bit more aggressive or risky. Again, if you want to be conservative, so let me just write this in. So we got the 12, 19, 280s equals, I don't even know what that did. Conservative, 12, 19, 290s equals, I think this thing is just calculating math on its own. I didn't even know you could do that. So these platforms are so cool. 300s. I wish I knew exactly what it was doing. Aggressive. And what were the prices? So we got basically $13, $8.60, and $5.50. So that's the most I would pay for these. Ideally, buying in at 274 if you have the capital for it. Obviously, the conservative one would be the best bet. And this is basically the best way that I could find the risk to define my risk. getting in near or at my stop loss of 274 and seeing if this thing can't turn around and push up higher. Uh, let's see. All right, y'all. Um, so this is Google. What was I gonna say? Um, hmm, I'm wondering if there's any symmetry here. Oh, super close, right? That was an area that was beat up just a little bit. So, thanks for being patient, guys. I am multitasking over here, and as we know about multitasking, it's bullshit. You only can focus on one task at a time, right? All right, so these pullbacks are just slightly smaller than what's actually happening. Let's measure these. So this first pullback is $15.26. This next pullback is $15.48. And this current one is $16.40. So it's slightly bigger. Um, just went to, oh, look at this one. This one's $19. So there are some bigger ones. And this is the last one I would consider measuring. $17. All right. So 17, 19 together makes 18. Plus there was a few 15, 15. Uh, make it about 17 and some change, the average. All right. So this thing could possibly pull back to this stop loss area, which would make it a great entry. Maybe even down to this volume shelf over here, about 272. Um, so it's interesting. It's interesting for show. Um, so yeah, that's Google. We got our contracts. Got a little trade plan. Love the chart. Love the setup. Um, it looks like it wants to turn around, right? Of course, we have to actually see what happens. And what was the news? Oh yeah. Yeah, let's see. What is that? Fluid Stack, TerraWolf, and Cipher Mining. Let me see. Let's see. Fluid Stack. Stock. So it looks like this stack, fluid stack, that's funny. It looks like this company is private, fluid stack, and they are not actually public yet. Looks like it's talking about an IPO. uh, for these guys. What was the other one? Terrorwolf. Terrorwolf. Oh, Wolf. Yeah, so Wolf is an actual stock. Look at that. Oh, that's an interesting shape. They have earnings. Oh, Monday. They have earnings tomorrow. They've been trending up higher. So it looks like Google wants to use these guys for their data capabilities. And this shape right here looks beautiful to me. Wait, what's the high here? 1618, 1619. Yeah, that's the high. Oh, interesting, interesting. Hmm, very interesting. Price is down where it likes to bounce up from, right? And they have earnings tomorrow after hours. If they can actually beat earnings with this news of Google investing into them, things could definitely get interesting. So, so that's Wolf. Let's move on. So there's JP Morgan. It's been pumping. Came down, bounced off of 21. The daily is finally turned up, looking pretty green. What do these fib levels look like? So it came down. There was some confluence here. 618 retracement level with the 21 EMA. Price got bought up. Now it's so it had that support and then plus the point of control right here around 312. So interesting. Looks like JP Morgan might want to keep on keeping on. Um, is there anything where the price can actually give us some sort of entry? So this is not hard. A 1 hour chart. If price comes down to 312, right, which happens to be the point of control here, um, uh, it's interesting. Uh, I said because from what I believe I see, we have consolidation here, right? And then we have what's called an expansion. So the price comes up from out of the consolidation, pulls in buyers, then drops underneath the consolidation. This is the expansion, essentially making space for what's about to happen next. And then we have the actual trend, which tends to go something like that. So consolidation, expansion, trend. Um, so my was in the idea of, I was gonna say this would make a great entry around 312 to play this chart, but I don't know that price is gonna come back down to this area, this point of control. This pattern here is pretty technical. Consolidation, expansion, and then trend. Let me change the color of this so it's a little bit different. So consolidation, the orange is the expansion, and then the trend. The expansion pulls retail buyers in, people who don't understand that this tends to happen before the actual trend. Then it comes down, stops them out. This is where institutions get long, and then price surges to the target. If you are someone who tends to get in the consolidation area on a break of structure, and then you end up losing and stopping out, and then you watch the chart go ahead and make profits or hit your target, this is the reason why you don't understand the game fully. And so what you want to do is either when you get in during this consolidation is take profits on the mini pump, the expansion up, or wait for the expansion, and then on the pullback, this is where you want to enter. Typically it will be underneath a break of the structure, underneath wherever your stop loss is, and it will look like this thing's just going to be turning around. It's pretty ugly, right? But this is when you want to actually be getting into charts. When there's fear, you want to be buying, and when there's excitement and all that other stuff, you want to be selling, right? So this looks good anyways. Might be a shorter time frame setup that would allow for an entry, right? But this one looks like we missed the train. If there was a pullback, right? If I was wrong and this thing actually pulled back to like 112, 312, 311, something like that on the hourly chart, then I would just come in right here to these November 21s and buy something at the money. Either these 312.50s or the 315s. I think that'd be great. As you can see in after hours, JP Morgan's up $2. So price is still pumping. Regular trading hours. All right, LRCX. The monthly is up here. It's got to be at some sort of fib level. This thing is so TP1, TP2, TP3 all got smacked. 3 ATR got smacked on the monthly. On the weekly, this thing's been riding up, came close to 5 ATR, pulled back tremendously, and then pumped right back up. So this thing has some force going up behind it. They beat earnings. They pay a dividend of 26 cents. Price came down to the 21 EMA and then got bought all the way back up to this area up here. So very interesting. So we got a 195-minute setup. The time to buy would have been a Friday, in the middle of the day, before noon. We can see, or around noon rather, price was in the buy zone. Now it's just out of the buy zone. Ideally, you want to wait for a pullback between 154 and 157. All right, so 154 to 157. This is the buy zone. I'd stop out under 154, which coincides right with this. This was resistance, resistance. Now it's support, support. So essentially under here, it could act as resistance and price can come back down to the 145 area. Okay. So probably under this 153 and 50 cents. If price starts coming under there, I would stop out. There might be some symmetry here. Let's see. Nope. Okay. And what about a fib? Not quite. Okay. So major resistance around the 162, 163. TP1 and 3 ATR, 171-ish. Some confluence right there. TP2 175, TP3 180, confluence with the 5ATR. This is LRCX, LRCX, LRCX. That was the 195-minute chart, and I would just go 30 days. Oh, these contracts are ugly. What happened? What about the 5th of December? All right, these are better. So the 160s here got a 45-cent spread. I'm cool with that. So that would be 12, 5, 160 calls at what? 880 or better. Stop out under 153.50. Take profits. So we got major resistance. What was that? 162. TP2. The old highs around 166. And then TP3. We're just going to call it 170 plus all the way up to 180, right? So again, the closer you get into where your risk is defined, the less you have to risk to find out if you're right or wrong. If you happen to get in, where the price is currently, right. Yeah, pretty much risking you're risking $1 to make 50 cents at the first resistance level. At the old highs, you're risking $1 to make $1.20. Once you get to the 170 area, you're risking $1 to make $1.80, 258, and you don't start risking $1 to make $3 until you get to the last take profit. So December 5th gives you about 26 days. If you want more time, you could also go out to December 19th. I mean, it gives you 40 days, about two more weeks for roughly the same price. You know, another $2 or so. So you could also do the 12, 19, 160 calls at $11. So I make my notes here for you guys, but I also make my notes for myself, right? Because when I come back through this watch list during the week, when I see pullbacks, then I'll know what I need to purchase. That's pretty much how I do that. When I get red over here during the week, that means a buying opportunity for me. So I'm like, ooh, you know, A firm's down 3%. Let me go look at the setup, and then I'll click here. I'll be able to back up and see, oh, okay, here's where my risk is defined. Price is right down here. I only have to risk $2 to find out if I'm right. Beautiful. Oh, these are the contracts. Great. I'm feeling aggressive, or let's go conservative, whatever. And then I just put my money up. So that's how I do that. Okay. I slowed down a little bit because I actually have more time. What I had to do has been delayed. So that's why we're still here. Okay. These guys reported earnings. They did beat earnings by 42%, but they still reported a loss. So that's pretty ugly. What I do like here, right, it's the same pattern that I just kind of showed you guys. So we have consolidation, And then we have, ta-da, an expansion. So price goes up over the consolidation and comes down through the consolidation. So this looks like to me possibly the bottom of the expansion, which means what's next is the trend. Yay. All right. What does this say? Yeah, that's right. This is old. So if you didn't know that, MP is now working with the government. I believe Trump bought a 10% stake in their company. Same thing he did with Intel and some other companies. So this move is right in line with his executive order 14241, I believe. Basically, they're going to dig up the United States and the waters surrounding the United States looking for minerals. This past week, they added copper and something else to the list. So this is happening, guys. It's a great time to buy precious metals. It's a great time to buy into miners. It's a great time to buy uh, basically anything that's involved in precious metals. My favorite thing to buy, let me just segue a little bit, is this company, GEOS. This is my favorite, absolute favorite thing to buy as a play, as a play on this executive order. Oh, that's weird. These are all blacked out. Anyways, why this company, GEOS? GEOS happens to make something called geophones. And geophones is the technology that these mining companies are using to dig up the minerals. So this thing has an all-time high over here at about $112. It's about a, I don't know, 300% move, right? Yeah, it's about a 300% move from where the price is currently. Um, this is definitely my favorite name. I think this thing is gonna keep on booming. Trump mentioned the executive order in March about here, and since March, this thing is up 270%, right? And I don't think it's slowing down anytime soon. So, if you like to buy stock, this is the stock to buy, I believe. GEOS. They have a patent on the technology used to dig up minerals. All right, let's go back to MP. So MP, to me, look at that. Consolidation, boop, 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 boop. Expansion, boom. Pulls in all the bulls and then takes all their money. All the bulls, right? Look at this. 1, 2 green candles from October 14th to November 6th. Just horrid, taking away your money. And then now we got a nice long green candle from 50 to $58 in a day, a 12% move. It's beautiful. And I think this candle is the beginning of the trend that's going to push this thing back up over $100. So, does this thing have any squeezes? 2-day, 3-day. Here we go. So the 3-day chart and the 4-day chart. On the 4-day chart, price is in the buy zone, which would be about 63.70 to 56. Price is at 59, so right in the middle. And on the 3-day, it's still underneath the buy zone. So it's a great buy regardless. I wouldn't buy on the daily because the dots down here are green, which means there are no squeezes, right? The 2-day, same thing, but the 3-day has squeezes. So we have consolidation, expansion, Next is the trend, y'all. Next is the trend. Um, Let me see if MP has any short float. 17, 18% short float. So this is wild. So the stock has 18% short float, which basically means 18% of the shares are short. Since this is a 3-day chart, I want to go at least to December 19th. Okay. So these 60 calls for December, I love them. $6, 60 calls, right at the money. Beautiful. If you want to be more moderate, these January 60 calls. And if you want to be more conservative, the February 60 calls. This is a lengthy chart, right? Each candle, it takes 3 days for each candle to close. So this thing's going to need some time. If you look down here, this was the last little consolidation period we had. And then out of that consolidation, it essentially took 134 days for the price to get to the highest point. The second highest point took 70 days. Okay. So that's why these conservative ones are called conservative, right? You get 100 days, 70 days almost, and then 40 days more aggressively. Because of the high short float, I think these will move quicker. But again, you want to size and choose your contracts according to your own risk tolerance, whether that be financial or emotional. So essentially, I would just stop out under $50. Stop loss, $50. Take profit. I think honestly, this thing goes to $100. 100 plus. A is for aggressive. We'll do the 12, 19, 60 calls. M is for moderate. 116, 60 calls. C is for conservative. 220, 60 calls. 620, $8, $10. Unless what does that look like? Risking $1 to make $4 at the previous all-time highs. If you get to the 1272 fib retracement level, risking 1 to make 6. If you get to the 1618, risking 1 to make 8. And if you get to TP3, risking 1 to make 10. So this is what we call asymmetrical risk-reward ratio, right? Risking $1 to make $10. To me, that's a great trade. Any day of the week. They also have earnings February 19th. So February 20th, expiration series makes a lot of sense in terms of holding premium, in terms of implied volatility. It'll probably perk up as we get closer to that date. And for $10, that's a really good deal, right? In my opinion, of course, obviously, right? I'm the one talking. Duh. Okay, so my favorite contract for these would actually be the conservative ones. That also happens to be the earnings date. So 220. No, they report 219. Earnings. All right, cool. So MP is really, really interesting here. Um, Risk is defined, right? Really tight risk. Lots of upside potential. Especially here on the monthly, like this thing hasn't even, it's not even close to its 3 ATR, right? It popped up earlier, July, August, September. It's been pulling back since. I think it's ready for, I think it's ready for its next leg up. All right, Morgan Stanley, MS. So these guys beat earnings, gave out a whole dollar dividend, and when did they report? January. Is this the high? 166.77. No. Mm-hmm. So looks good. Um. All right, price has been rejected here a couple times. Once, twice, 3 times, 4 times, 5 times. Price was bought up here from 158 on Friday from underneath the 34 all the way up and closed on top of the 21. So the bulls are absolutely in control here. Right, this is the other level, right? Was resistance, 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 support, resistance, 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 support, 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 and then price got bought up and closed on top of the support level. So price hasn't closed underneath there since October 23rd. All right, so seems like this is the new area, essentially buying here, selling up here. But this area was hit 5 times already, so uh, price may be wanting to get through that area here pretty soon. This is a daily chart. Let's set up a fib. So we got the major resistance coming in here on 165, which is also a psychological number. And 3 ATRs up here on 173, close to the 1618. 1272 is over here around 169. What do these contracts look like? This is a daily chart, so these December contracts will be, the most, probably the most time you'll need, honestly. 40 days. It's plenty of time. 165 is basically at the money, a little bit outside the money for about $5. Those are pretty good. This thing's been squeezing for a while, since the beginning of October. So it should be getting ready to make a move here pretty soon. Let's see. If you want to get something cheaper, you could go with the December 5th. 165's here. It's a 30-cent spread, so you will lose out on $30 getting into and out of this position if you buy at the mark. But for a $163 stock, that's not horrible. What's this thing's ATR? $7.50 on the weekly, so it's not big. $3.50 per day. Okay. Yeah, I could do those. 12.5, 165s. 165 calls. I'm gonna just put 380 or less. the ideal entry would have been down here on Friday, right? The very bottom of the buy zone, essentially where you'd want to be setting your stop loss just underneath that 158 area, right? Which was like resistance, resistance, then support, support. That was the entry, the best entry. But you could also buy in between where price is now currently 162 and that same area 162, 158. Right? And then depending on how many contracts you buy, depending on your style of trading, you'll either want to be paying yourself near resistance up here around 165, 166. The old high is 167 and 13 cents. And then as we break up over 170, 172, that's MS. This is RTX. They beat earnings. The monthly's been going crazy. The weekly, same thing. The daily's finally pulling back. So look at that. Price finally pulled back between 21 and 34. And now it looks like it's pumping up out of this area. We also have a momentum shift, right? Momentum was going down, dark blue, red, and now it's shifted to yellow. So that's a positive sign that things are looking up. Ideally, you want to get in, in this zone. It's that 172.81 to 175. So call it 172.8 to 175.8. 170 seems to be the old resistance and support. Price could come down and retest it, right? It popped up through this resistance on an earnings pump from 160 all the way up, and it came up, and now it's, could be coming down. Little trend line there, and here. So this thing could keep bouncing in this area until it comes down. Right, retest this area. This is also the point of control down here. So you got the point of control, the trend line, and that could very well happen. It could also break up over this trend line and start consolidating up here. Many things are possible. Nobody knows. What we do know is that price is definitely in this channel, and we got resistance, the trend line resistance around this 177, 178, and then we have these Fibonacci retracement resistance levels basically between 178 and 179. All right, all-time highs, or the previous swing high, is 181.31, which is stacked with this 3ATR. So we got some confluence here, some more resistance, and then we got the 1272 and the 1618, which also coincides with the 5ATR. So this one's definitely one to watch. I wouldn't mind getting in on a pullback back down on this trend line here, or a break and consolidation over this level. RTX, this was what, 195? Was there anything on the daily? No. So 195. Again, these December 5ths are fine with me. I think the 175s are the best bet. They're at the money. You get a 50 delta. and it's only a 25-cent spread. So we'll say 12.5, 175 calls at 540 or less. Take profits, RTX over. I mean, where price is currently, I feel like you might as well go for the all-time high area, 181, and I would stop out underneath 170. If you got in where the price is, that's going to be a little bit more unfavorable, right? That's risking $1 to make 60 cents. It doesn't get decent until you get up here towards 189. That's why I would prefer to enter, you know, down here near the trend line, around this 172 area. All right, 172.80 to 175.80. That would make it risking $1 to make $3 at the old resistance. All right, so that's more my speed. And I would just get the same contracts. I would just wait for a pullback. You know, doesn't have to drop much. Just come down to this trend line again, about a 2-3% drop. You know, sometimes these drops happen early in the morning, between like 9:30, 9:35. You'll see that dip, and then this thing will get bought back up if there's a lot of people that agree with the thesis. You know. Alrighty, that's RTX. Last but not least, Uber. So Uber's doing great things. Like, so Uber is thinking about expanding into Turkey. Does this have to do with it? Let's see. No. This is just Musk and his robocars. So competition for Uber. Competition and not competition, right? Because Uber tends to buy up Tesla's cars. So they kind of work together. I feel like this year a lot of companies are just kind of coming together, working together. Uber and Tesla, Google and Apple. There's a lot of interesting ones out there, but let's get into Uber. So Uber beat earnings by 350%. This to me is mega bullish. I mean, that is insane. You don't typically see companies do that, especially more well-known companies. They have a profit margin of 33%. I'm looking at it on my phone, so you can't see it here, but what that means is that they're keeping $33 out of every $100 they make. So they are killing the game. And they are making $18 more this year for every $100 they made last year. So Uber right now is killing the game, okay? Keeping $33 out of every $100 is insane. But if you look at the Uber Eats prices, I mean, it makes total sense. So here I see a lot of symmetrical pullbacks, or what looks like symmetrical pullbacks. I'm going to test them and we'll find out. So that was pretty good there. That was pretty good there. That one's pretty good there. All right, so we got some symmetry. Let's see what this looks like. No. 618. Um, let me see. Let me see. All right, so we got some levels here stacking up. We got the point of control. We got a few symmetry levels here. This one was violated, so I'm gonna take it off. We got the symmetry level 8925 and 8955 618 level, and the 8859 34 EMA. Okay, so this support is gonna be from 8859 to 89.55, right? About $1. So I'm happy stopping out. Stop out under 88. All right. And this was on Tuesday. Okay. Alrighty. So here's our target. We got the 102 all-time highs, 105, 109, 3 ATRs at 111, 5 ATRs up here at 123. What I really like that I just noticed is this and this. Do you see it? They're pointing up. They're pointing up. Okay, that's a positive sign. See here, they were pointing up, and then look what the price did. Price went up 18% in 14 days, right? Off these red candles. These things are pointing up, price goes up with it. Right here, pointing up. Look at this thing. 49% in 42 days. So price is basically at the dead lows, right? It's at the point of control. It's on these Fibonacci levels. This was the old resistance that became support. All that beautiful stuff. The best day to buy would have been at the close on Friday, looks like. This is a weekly chart. Yeah. So you had Friday, Thursday, and Tuesday where the price dipped, which was beautiful for buying. But I love that. Okay. So price is looking like it wants to get up out of this area. In fact, because the 5 ATR is so high, I want to add some more levels. It's got 121, 130. Okay. So we got to stop under 88, our support here, and then these are our levels. Okay. Let's see if we got in. Let's just say price opens up where it closed. Okay. And then we're gonna stop out under 88. So we'll say 87.94. The first resistance, you're risking one to make $1.50. At the all-time highs, you're risking one to make 230, and then it gets interesting. At the first 1272 level, you're risking $1 to make 310. At the 1618, you're risking $1 to make 410. 3 ATR, $1 to make 450, $1 to make 5, $1 to make 7. And at 5 ATR, you're risking $1 to make $7.50. So great risk versus reward ratio. Let me see this thing. So this thing's squeezing on the monthly chart, squeezing on the weekly chart, squeezing on the daily chart. All right, this thing is just squeezing everywhere. The 195 fired short, which means the other ones did too. Yeah, alrighty. So I love this. I love this setup. I love, love, love that they beat earnings by so much. And I love that these things are pointing up the way they are. We want to get some time. Even though this thing's been squeezing since, what, mid-August, you still want to get some time. Or I want to get time. All right, this thing's been in this consolidation. All right, technically that's the area. Okay, just up, down, up, down, up, down, up, down, up, down. All right, when it breaks out, and it will, this thing's gonna have a lot of energy behind it. Uber, on the weekly. So let's go Uber. Let's check out the weekly. This thing is full of energy. This purple glowy light shows us that Uber is filled to the top, to the rim with energy. It's filled with energy. So this thing is loaded. Okay. Absolutely gonna want time on these. December, January, February. They report earnings February 11th. These February 20th contracts are probably going to be the best ones, again, for holding the premium and for getting that excitement. Obviously, what is it, February 12th? February 11th. So that's that week before the week of February 13th. I'm sure as we get closer, Uber will have weeklies for that week. That'll be the earnings week. That'll be worth buying for sure. But to get involved now, these Januaries and these Decembers, these 100 calls, I like that a lot. I like that idea. There's a 10-cent spread, $90 stock. I'm not the only one, right? Look at all the open interest, 24,000. So folks are thinking something similar, right? I mean, these things, if Uber starts pumping up towards the hundreds, those things are going to really catch a bid. These 100 calls. Super tight, super liquid, right? Super, super liquid. 68 days. So it's a good moderate contract. 68 days to let Uber run. What kind of ATR? Uber has a weekly ATR of $6. So 68 days. Let's call it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 candles, $6 a candle. Uber technically can move $60 in the next 70 days. You know, but even if it just did half of that and just moved $30, right? That'd be great. But half that, I think, is even better, which is like 25% of its ATR. So just being super conservative, if it only does a quarter of what it normally does in terms of a trend, that'll still put Uber around $107. All right. I really like these 100 strikes, so I'm gonna put that these 116 100 calls at 280 or less. These are just my faves. So we got aggressive, moderate, and conservative. If you want to be aggressive, it's going to be 1219, 1219 95s at 325, 1219 95 calls at 325 or less. Moderate's going to be January 16. 95s are cool. So 116 95s. 95 calls at what? 455 or less. And then if you want to be conservative, 220 90 calls. 90 calls at I hate when that happens. 925 or less. So those are the contracts. I'd stop out under 88. This is where the major support is. Some confluence, right? We got those fib levels. We got 34 exponential moving average on the weekly. And yeah, I think that was it. So that's Uber. That's Uber. My favorite setups were A firm. We got this fib cluster, super tight stop loss, right? Ideally, you want to get in on a pullback. I would want to get in on a pullback. I liked A firm because they beat their earnings by 100%. I love what the company does. I'm likely going to buy some stock and play this option setup as well. I think this company's absolutely going into the future as things get more expensive. Inflation continues to steal the value of our money. I think companies like A-Firm and Klarna and Upstart are going to do amazing. I think Google had a great setup. What is it, 1 hour chart? 195. Oh, the 130. Yeah, it's a nice setup here on Google. MP. Yeah, this was the one I really like. It was a 3-day chart, right? No, 4-day. I guess it doesn't really matter which one I play, as long as I get enough time on the contracts. For this one, I like the conservative calls. The 60 calls for February gives this thing plenty of time to just rip. They also have earnings in February. Yeah, this is the one I really, really like because the price is essentially at the bottom of this expansion. The technical way to trade this would be to wait until the price got back over the center of the consolidation. So let me just extend these lines left so y'all can see. So this is the consolidation, and the center of it is basically this yellow line. What traders would do is wait until as price comes back up over the expansion to make sure that it's gonna do what we want it to do. So they would wait till it gets over this yellow line and then they would go long and let the price do its thing because it could always get rejected from here, right? We don't know what's going to happen just because we have consolidation, expansion in a bullish pattern. It means there's a higher probability of one thing happening, but it does not guarantee what's going to happen. So the best way to play this is wait for price to get up over $70, basically 69.50, and then buy your contracts. Ideally, you buy the February 20th ones and just let this thing sit and let MP run. I think it's going to run, with Trump's executive order, with this technical pattern, with the fact that they beat earnings. I mean, a lot of great things the way this looks, technically, anyways. Let me just check if they have made any money. No. So they're making $26 more this year for every $100 they made last year, but they are losing $50 on every $100 they make. So the company is not profitable at the moment. Okay. They're essentially this move up, right? This, 200 something percent, 250% move. What is this? 400% move. So this 400% move higher is basically on the speculation from Trump's executive order. That's purely a speculative pump. 400% of speculation, which is why now the market is giving it back, right? Almost 50% of it in a third of the time. So it's all speculation. It's not like this company has great numbers. Again, my favorite way to play Trump's order would be on GEOS. I think this is the stock. They have the technology that nobody else has that will play a huge role in the excavation of minerals. I think I said that right. All right, y'all. I'm pretty sure I've talked your heads off. Um, don't forget, major news Thursday and Friday. I got A Firm, MP, Uber for the long calls. Uber probably the best with this 350% beat. I mean, what more could you ask for? It's still in its consolidation. Prices at the buy zone. Super tight stop, right? Stopping out under 88. Currently, you'd be risking about $4. I mean, to possibly, watch this thing run up into the hundreds. And you got plenty of time if you get those February contracts. I hope this helps. Happy trading this week.